about the state of the U.S.-China relationship after the U.S. intercepted a series of high-altitude intrusions from balloons or otherwise.
Well, we know that China is testing us in a variety of ways. They're testing us now with what can only be described as surveillance balloons, attempting to capture information from the United States for obviously their purposes. And David, this is just a pattern, whether it's trade, whether it is intellectual property, whether it is the military, whether it is you name it. This is a pattern of what they're doing. We have to stop reacting. We have to be proactive. That should be our goal.
Okay, so you may have just implicitly answered this question. My question is if this is a test that China is using to try to test our ability to respond, are we passing the test in your opinion?
I would argue that we continue to react and be less proactive. Now, when I say being proactive, I mean, for example, we know that as the United States and the EU has decreased our carbon emissions, manufacturing has shifted to China, and now the increase in foreign pollution from China exceeds the decreases in the EU and the United States put together. Just one example. We know they exploit intellectual property laws in which counterfeit goods are shipped to the United States, robbing us and others of that profit from the intellectual good, but substituting a product which is often dangerous, etc. We need to stop just saying this is what they're doing and put in policies that effectively push it back and change the rules of the game, if you will.
Get more of this and other conversations on the latest Balance of Power podcast. Listen on the Bloomberg Business app, Bloomberg.com, and anywhere else you get your podcasts. Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It is now 6:55 on Wall Street. I'm Doug Krisner in New York. We check markets for you all day long here on Bloomberg. We had the CPI report. That's how the day began today. The cost of living cooling just a bit in the month of January, but don't be mistaken. Overall retail inflation remains elevated, and that prompted a number of Fed officials to stress this idea that rates will remain higher for longer. That was one of the themes. If you look at now what the swaps market is pricing in, a near even chance for a quarter-point rate hike in June. That would follow similar rate increases in both March and May, and this idea that the Fed perhaps could cut rates this year, that's off the table at the moment. Rate-sensitive two-year Treasury yield was up nearly 10 basis points, 461 in yield terms. That's where the action is going to begin at the top of the hour when trading in Tokyo begins. The dollar a bit weaker against the majors, not by much. The Bloomberg Dollar Spot Index down 0.1%, but the yen weakened quite a bit. We were on the weak side of 133 earlier, trading around 133 at the moment. A little bit of strength coming through, and the dollar for the moment is stable against the majors. At the end of the day, U.S. equity benchmarks were mixed. The Dow was down 0.5%. NASDAQ comp, though, rising 0.6%. In the broader market, the S&P weaker by just 0.1%. Right now in Sydney, early going, ASX 200 down about 0.5%. Chicago Nikkei futures imply a move of more than 100 points to the upside when Tokyo comes online. Keep your eye on Toshiba Corporation. The company cut its full-year forecast for operating profit. ADRs in New York were down by more than 3%. We'll take another look at markets for you in about 15 minutes. We'll cross to Hong Kong and get the media review right there.
Yeah, there's a story here in Dow Jones as TikTok negotiates with the U.S. government over its U.S. operations. An unofficial force, the paper says, at the negotiating table is the Chinese government. TikTok has proposed offering to have third parties in the U.S. oversee the code that makes its recommendations. Some Biden administration officials want more. They would like ByteDance, the owner, to sell off the American business. Now, this story doesn't go in to name any Chinese officials that would be involved in the negotiations. It quotes sources as saying that ByteDance has communicated with Chinese authorities in an informal way, saying that Chinese officials have responded with some general advice, but they haven't given any substantive instructions. That's what they're hearing from their sources. From Yonhap, they quote a U.S. lawmaker, Young Kim, a representative from California, as saying that the U.S. needs to better demonstrate to South Korea its commitment to helping defend its ally against any attack. Kim says there's a need for the U.S. to demonstrate its resolve. And finally, in the South China Morning Post, Pakistanis are queuing for hours to get coffee and pastries from the Canadian chain Tim Hortons. It just opened its first outlet in the country this week, and it's just as the economic crisis worsens. And so part of this story is the growing disparity, the gap between rich and poor in Pakistan as a very young population. In less than a month, Pakistan's currency has lost more than a quarter of its value against the dollar. Fuel prices rising by about 20%. The government implementing fiscal measures. Those measures a prerequisite to getting aid from the IMF in an IMF bailout. And Rish, inflation in January spiked to 27% year on year.
Yeah, I mean, the country here is having to also deal with an energy crisis on top of all this, and there's something called load shedding because of them not having enough capacity, and this has, of course, been exacerbated by the flooding that we saw, which really took about put a third of the country underwater. As a result, they look at what's going on and they look at their energy future, and this, of course, doesn't bode well for the rest of the world because they're going to be increasing coal-fired power capacity fourfold. They're not including LNG in their long-term plans here. So, this is not something that you can take lightly because it affects us all.
Yeah, and in addition to the catastrophic floods, very much weakened by COVID-19. Hopefully, that is passing. Coming up to the top of the hour, we'll get you the top stories. Doug Krisner will take a closer look, and we'll look at markets as well. This is Bloomberg.
Live from the financial capital of the world, broadcasting across the globe, this is WBBR New York, Bloomberg 1130.
This is Bloomberg Daybreak Asia for this Wednesday, February 15th in Hong Kong, Tuesday, February 14th, Valentine's Day in New York. Coming up this hour, U.S. consumer prices rise the most in 3 months, and Fed officials are warning of more rate hikes. President Biden names Fed Vice Chair Lael Brainerd as his top economic aide, and Air India will buy 470 aircraft from Boeing and Airbus in a record order.
Pentagon says the latest balloon shot down likely not for intelligence gathering. Senators asked the president to address the public regarding the balloons. President Xi pledges to deepen ties with Iran. Nikki Haley's in. I'm Ed Baxter with Global News.
Bayern Munich gets past PSG in a Champions League round of 16 first leg match. On Dan Sportsman, I'll have that story and more coming up in Bloomberg Sports.
That's all straight ahead on Bloomberg Daybreak Asia. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Equity markets now online in Tokyo and in Seoul. It's 9 in the morning in Japan. If you're joining from the region, good morning. I'm Doug Krisner at the Bloomberg Interactive Broker Studio in New York. Let's start you off this hour with a look at market action. Brian Curtis is in Hong Kong looking at what we're seeing on the screen. A little bit of a mixed picture, I'd say.
Yeah, it's a choppy open, I think, here for Asia as we try to figure out really what to read from the Federal Reserve, because we did get some slightly opposing comments. And as you mentioned earlier, inflation seems to be digging in a little bit. The Nikkei has opened up about 1/3%. We also see gains in Seoul, the Kospi up 1/4%. Meantime, a downward push in Sydney with the ASX 200 trading down about 0.6%, off 44 points. In early trading this morning. The S&P 500 itself closed nearly flat, but it did rise into the close. I'll get to that in a moment. 2-year Treasury yields adding more than 10 basis points after that data on inflation remained high. Now, the swaps market is showing that traders are giving close to even odds on a 25 basis point increase by the Fed in June, following similar hikes in March and May. Fed speakers seeming now to coalesce around this idea of higher rates for longer. The Fed Reserve Bank of Philly President Patrick Harker said the Fed was nearing the point where rates were restrictive enough. He said, in my view, we're not done yet, but we are likely close. And while that's a kind of nebulous comment, that was one of the reasons that stocks actually gained into the close on Wall Street. Some numbers for you here. The yield on the 10-year Treasury now 3.74%. The 2-year at 4.61. WTI crude $78.73. down about 0.4%. Doug, over to you.
Thanks, Brian. Well, if you look at Wall Street's reaction to that CPI data, markets now are realizing that inflation is likely to remain higher for some time to come. Earlier, our colleague spoke with the former chief economist at the IMF. He is Ken Rogoff, and he said that the Fed's 2% inflation target remains part of the problem.
Back in the day, they should have said 3% instead of 2%, but they didn't. And, they've really made commitments. If you change it, it means you might change it again. So I think what in fact will happen, I don't think we're going to have a soft landing, by the way. I think we're going to have soft, but not the landing. I think inflation's, they're going to allow to be elevated for longer, but they're going to say it's going to get back to 2%. We're just taking longer. I think that's going to be the rhetoric.
That is Ken Rogoff there. He went on to say the Fed is going to have to figure out where to put the interest rate longer term so that the U.S. does not have an inflation problem. Well, immediately after that CPI report, a number of Fed officials stressed the need for further hikes. We heard from the head of the Dallas Fed, Lori Logan, saying that more is needed and the Fed should not lock in on a peak interest rate or a precise path of rate hikes. I also heard today from the head of the Whitman Fed, Tom Barkin. Here's what he had to say earlier on Bloomberg.
We may or may not choose to take rates up further if inflation continues to persist, but we'll have to see what happens. If inflation settles, maybe we don't go quite as far, but if inflation persists, levels well above our target, maybe we'll have to do more.
Then later in the day, the head of the New York Fed, John Williams, was saying subdued economic growth and labor market weakness will likely be required as a way of bringing inflation back down to the Fed's 2% target. We also heard from the head of the Philly Fed, Pat Harker. He added his voice in believing the Fed will need to do more, trying to get the Fed funds target to around 5%. And he said beyond that, the data will dictate how high the Fed will need to go. Well, President Biden has named Fed Vice Chair Lael Brainerd as his top economic aide. She will replace Brian Deese as director of the White House Economic Council. Here is Bloomberg's Michael McKee.
Lael Brainerd has a lot of experience in Washington. She was Deputy Treasury Secretary. She was the Deputy Head of the National Economic Council before. So she has worked on the political side for many years as well as on the monetary policy side. So she knows everything about what's going on in Washington. And she is also considered to be a very capable kind of, I don't want to use the word bureaucrat, but somebody who knows how to get things done.
Bloomberg's Michael McKee there. By the way, the Fed saying that Brainerd today submitted her note of resignation as vice chair. It will be effective on or around February 20th. Her departure means the Fed will no longer have one of its most dovish voices. Fed watchers are beginning to speculate already on potential replacements. Names circulating include Karen Dinan and Janice Everly, both economists serving during the Obama years in the Treasury Department. Brian Sack, the one-time head of the New York Fed's markets group, his name was also floated as a possibility. 6 minutes past the hour as we update global news next. The U.S. says the three as of yet not identified objects down since last Friday don't appear to be government-linked. Ed Baxter with more from the Bloomberg Newsroom in San Francisco. Eddie.
Yeah, exactly right, Doug. Pentagon says likely for commercial use, not foreign intelligence gathering. And the White House says now that China's been launching balloons over the U.S. for years, but has just recently ramped things up. National Security Council spokesman John Kirby.
We have been working the Chinese balloon program since we came into office, and this is a program that they have been working on for several years. So they have ramped up their abilities, they have ramped up their deployment of these balloons over just recent years.
Yeah, Kirby says Congress was briefed about it in classified setting going back to last August. A full Senate got classified briefing about the status today, and Bloomberg's Emily Wilkins says the overall message, a call for clarity.
And really what you're getting from senators is a call for transparency, a call for the White House to take this issue seriously, and even if we don't know every last detail about some of these objects, to make sure that they are just clearly communicating with the American people on this because of how sensitive this potential issue could be.
Emily says they call for a speech. Leon Panetta, former U.S. Secretary of Defense, CIA Director, former Presidential Chief of Staff today on balance of power, says one explanation for the recent change in balloon activity is, well, carefully thought out by the Chinese.
China may very well be harassing us with these objects. to try to create the kind of confusion that's taking place in Washington right now as to how we deal with it.
And he says so far it's succeeded.
We've got to have a strategy. I think if they are related to China, all of them, then we've got to develop that strategy, hopefully in conjunction with China. If not, we're going to have to continue to shoot them down if they represent a threat to the United States or to our airspace.
And he says Biden has done the right thing so far. Meanwhile, the Pentagon scrambled fighter jets to counter 4 Russian aircraft that approached but did not enter the U.S. or Canadian airspace. Officials describe it as a routine encounter unrelated to the series of unidentified objects shot down in recent days. Nikki Haley is officially a candidate for President of the United States. In her presidential video released today, she immediately pushed buttons on China and on Russia.
China and Russia are on the march. They all think we can be bullied, kicked around. You should know this about me. I don't put up with bullies. And when you kick back, it hurts them more if you're wearing heels.
Also says it's time for Republicans to win the popular vote. Again, I've never tried that, Doug. I with heels. But that's probably a different story. I do kick back. All right, yours.
All right, thanks, Ed. Let's get to Ben Kirby. He is our guest. Ben is co-head of investments, also a portfolio manager at Thornburg Investment Management. He's on the line from Santa Fe, New Mexico. Thanks for being with us, Ben. I think we've got to begin with this inflation print. Maybe we saw a little bit of cooling in January, but I think there's no arguing the fact that inflation does remain elevated, and the Fed's going to lean into this for some time. Markets now pricing the possibility of another 75 basis points in tightening. How does that square with the way you see the economy and markets generally speaking in the U.S.?
Yeah, thanks for having me on the show. Look, I think the economy is slowing, but it's still strong. Inflation is slowing, but it's still strong. So I don't think today really changes that narrative. On the margin, I would say that this gives a little bit of ammunition to the hawks, just because inflation is slowing less quickly than we had hoped it would. But I think that let's wait and see. I think that the Fed will remain data dependent. And, kind of one data point doesn't totally change the narrative.
And Ken Rogoff was making some interesting comments to our colleagues earlier in the day. He doesn't think there's going to be a soft landing. He thinks it'll be soft, but not a landing. So maybe we come in and just nip the surface of the water, so to speak, or the runway, whatever the apt metaphor is, and we avoid some kind of significant contraction that we might be tempted to label as recession.
I think there's definitely a possibility, just because we don't have a lot of other excesses that have built up in the system. So you think about some of the recessions that got really nasty in the past. It was a financial crisis. It was the COVID lockdown. So this isn't really a financial crisis. There aren't a lot of places of excess speculation that you can find out there. It doesn't seem like there's a lot of debt that's piled up in many places that's likely to really come back and hurt us. Maybe in private markets, there's some excess debt. But those are a few things that I think give us the hope that we're going to get a slowdown, but the consumer's in a pretty good place. Households are in a pretty good place, and the corporates are also in a pretty good place, and that they can navigate it without really having a major catastrophe.
So that yield curve remains inverted, and that would be something to argue for the possibility of recession. A 2-year that is now at 461. We were up nearly 10 basis points today. So the market's now beginning to price in, yes, more Fed aggression and the idea of rate